We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the Cash Flow Pro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hello, and welcome to today's episode of Cash Flow Pro, your daily real estate investing podcast and YouTube channel. Now, I am here today with Mariusz. Is that right?
Yes, Mariusz Skonieczny.
All right. Now, that will be in the show notes for those who need the spelling and want to know how to reach out to him. He is coming to us today. We were talking a little bit about the psychology of the real estate market and when the best time to get a deal on real estate investments is, and whether it's when everybody's happy and going and running and ready to rock and roll, there's never going to be another bad day, or when people are freaking out and it is all of a sudden the end of the world because the market has turned or whatnot. So tell us a little bit about yourself, where you come from, what you got going on with business today, and then we'll get into the direction that you and I talked about prior to the show.
Yeah, so thanks for having me.
Sure.
After college, 2003, I graduated with a finance degree, and I entered the real estate industry. This was during the time where Poor Dad, Rich Dad, those books were becoming popular.
Yep.
So I was interested in real estate investing, and since I didn't have any money, I figured might as well learn how to appraise real estate, how to value it. So I became a real estate appraiser on the residential side. Then I did commercial side, and then I moved into the brokerage side. And then in 2008, 2009 financial crisis, when everything was falling apart, that's when I left the industry, because at that time I was already studying on my own the stock market, Warren Buffett, and I just had more passion on the stock market side, and I left that. And since then I've been it's been like 12 13 years. So I started with 10,000 and I turned it into like 7 million over 12 years.
Yeah.
So notice I didn't say 2 weeks, and
Yeah, everybody wants it in 2
I
weeks
said
though.
Yeah. It took about 12 years to get there. And so that's a short introduction of my my path.
Awesome. And you said you live in South Bend, Indiana.
That's right.
And so what's, I guess let's talk a little bit. Can you tell us is it a MicroCap stock you said?
Yes. So it's very interesting dynamic, because you see, since you're in real estate, I've always had this. People like to categorize themselves into something. I'm in real estate because I can control it, I can touch it, and the stock market is something risky, unpredictable, and all that. And I always say, it's like, look, you can lose money in real estate perfectly fine. Okay, if you over leverage yourself, if you buy the property in the wrong location, if you don't pay your bills, if you don't have your tenants, you're going to lose money. Okay, so it's not the private ownership of real estate or public ownership. What matters is the business behind it. There's no such thing as, oh, the stock market is good or bad, but there is such thing as good and bad companies. The companies that are going to make you rich and companies that are going to bail you up. That's the difference. And the area of the stock market that I focus on is microcap stocks, which different people have different categories, but they are companies that their equity or market capitalization is about around 100 million, less than 100 million. And this is an area where the financial industry ignores. It's almost like somebody told me the other day, when you're involved in microcap, it's like the N word for the financial industry. Like they automatically think penny stocks, you're pump and dumper. So as a result, when you go into this area and you do it properly, like you seriously look at the businesses behind it, the fundamentals behind it, the clients, the revenues, and all that, you literally have no competition, because the retail side doesn't even know this area exists. The retail people are chasing the crypto, the AMCs, the Teslas of the world. They don't even know this area exists. The hedge funds don't go there because they're too big.
Yep.
If you have billions of dollars under management, you cannot go be chasing $100 million companies, because first of all, you can acquire 100% of them. And so if you get 5 or 10 million of equity, well, if you have $2 billion, you have to find thousands of them. So that doesn't work. So for people like me who want to roll up their sleeves and do it right, there's so little competition, and that's the only reason why I'm there. Not because I like this area, because I would say 80 to 90% of companies in that space are trash and you shouldn't ever touch. But those other 10 to 20% are interesting, and if you choose them right, you can change your life. Simply because everybody else refuses to be in this area.
Now, so you're right. And honestly, from somebody that's not in um fund well, from somebody that's not necessarily in the stock market or in the analyzation of different companies, when you start talking about $100 million company and you think about micro cap being something under that, you're exactly right. And it doesn't make sense until you start talking about the billions under management and how many thousands of those companies you would have to own 5 or 10% of in order to ever place the capital that needs to be placed for your fund. But so what are the kinds of things that stuck out to you as a company that was worth your time to investigate?
Okay, so since you guys speak the real estate topic, I will give you an example of one company that stood out to me. So I went through like 2 or 3 thousand companies on this particular exchange called Toronto Stock Exchange Venture, and that was like in 2019.
Okay.
And then there was this one company called, today it's called Voxtur, Voxtur. Back then it was called iLookabout. And I looked at it, and they were saying that they are improving the real estate appraisal process,
Okay.
because the average age of an appraiser is 62 years old. There's not enough of them. Most of them are white. Uh, People don't go into the real estate space after college. It's usually their second career. So the real estate appraisal is the bottleneck for the real estate transaction. It creates a lot of stress for the owner, for the broker, and so it's a major issue.
Yep.
Well, that company, uh, what they were doing is they were putting together various different databases, various different MLS, assessment data, all these databases together, so that they can speed up the appraisers. So in other words, they could give the appraisers all the data, inject it into their appraisal reports, and the appraiser has the appraisal done 90% before he even inspects the property.
Wow.
So I looked at it and I was like, okay, I understand the industry. They're building something special. And so I started studying it, and I realized, and nobody knew about it. It was on this exchange. The founder of this company, or the CEO of this company, founded other two companies that became like $1 billion companies. One
Mm-hmm.
was an Altas Group, which focused on the commercial real estate, and the other one was Real Matters, which was like the appraisal management company. And so he knew what he was doing. He had all these contacts, and so I got interested. I invested in it. And recently, for example, I'm not sure if you're aware of it, on April 6th, Fannie Mae changed the guidelines to allow attorney opinion letter to be used as an alternative to title insurance. And many people don't realize that title insurance is like a scam, because regular insurance companies, whether health or auto, when they collect your premiums, about 80% of those premiums are paid out in claims, because they price those policies based on probabilities. In title, because title research and title documents and title data is so good, only 5% of premiums get paid out in claims. So literally, title companies are like robbing the entire real estate buyers and sellers. So this company was working with Fannie and Freddie for like 2 years
Mm-hmm.
to introduce a new product to compete with title insurance that is cheaper, at least 50% cheaper. And it's called an attorney opinion letter, where but nobody is going to use an alternative product unless Fannie and Freddie approve it, because everything has to check all these boxes.
Yep.
If Fannie and Freddie approve something, then that mortgage can be sold to a secondary market.
Yep.
And that's what happens. Somebody originates it, the mortgage gets sold to a secondary market. So on April 6th, they approved attorney opinion letter as an alternative to title. And that company called Voxter, which used to be called iLookAbout, they changed the name to Voxter, has a patent on this, and they are the only game in town. So now this whole industry is about to get disrupted, or they're about to steal some market share from title. And because the industry is so humongous, $1 billion industry, for a company of this size, which is now the size of the company is like 500 million, but it's still considered a small company, and it's still not trading on the major exchanges like NASDAQ or New York Stock Exchange,
Yep.
which it will later this year. It's still trading on TSXV, which is Toronto Stock Exchange Venture. All of these things are happening, and barely anybody pays attention.
Yeah.
I mean, anybody that is in real estate, that they're like, their eyes get so big when they hear it because it's so humongous. But that's just an example of how I can identify something. Nobody else understands what's going on because the company is trading on a secondary exchange. I can get as many shares as I want. I can analyze the company. I can buy into it before everybody gets aware of it, and before it gets uplisted to NASDAQ.
Yep.
And once it's on NASDAQ, then, the whole world is going to know about it.
Yep. Now, how do you? Obviously, it's research and so on and so forth. Is how you find out about these things. But where do you? Trying to think here. Can anybody go trade on the Toronto stock?
Well, you have to have some brokers are just vanilla brokers where they just give you access to the most popular exchange.
Mm-hmm.
You need to. I have a broker. I mean, a lot of people have it. Interactive brokers, and you can have they give you access to other exchanges, international exchanges, and so you need to request it, and you need to get the permission to trade penny stocks.
Yep.
Because microcap stocks, they sometimes they might have a dual ticker symbol. They might trade on like an international exchange, but they might also get a US ticker symbol, which is an OTC over the market. So to do that, you have to have permission from the broker to trade the forbidden
Yep.
exchange.
Yeah,
so
I got you. And the penny stock, of course, we all know the story of quite a few of at least a few of those penny stock guys. So, but yeah, that's interesting, and it's so intriguing to know that there's a lot of those smaller companies out there, and some of the technology that some of them harbor is pretty significant as far as especially the real estate world goes. And there was one a couple years ago that I didn't own stock in, but I subscribed to their platform, and it was a artificial intelligence platform that could basically give you the odds that somebody on your list was getting ready to move based on online action, but based on actions of things they were doing online. And of course, I'm assuming that, like, if they're shopping for boxes at such and such, if they're looking to buy mass amounts of boxes or something, I'm sure that, that's obviously one of the most obvious ones, but there's a lot of those just little companies out there that have these technological breakthroughs, but it just takes them forever to get the funding. It takes them forever to get financed. It takes them forever to get found out. And then before they really get to take off, I mean, think about the predictability of somebody getting ready to having a program that aggregates enough information in one spot to be able to predict whether somebody's going to move or not. I mean, that's scary and big at the same time. I mean, so there's a lot of that stuff out there, especially in the real estate sector, because it's such a big transaction. And for so many years, it's been such a profitable transaction for everybody from real estate agents to insurance people. It's from moving companies to a box company. I mean, the somebody moving or or the real estate business in general has been pretty profitable for a lot of different companies. But
It's interesting. It's interesting that you're saying that because uh, sometimes what you can have is you can have a company that has this great technology, a great solution, but it can't go because of lack of capital, but it also has a hard time growing because of lack of contact in the industry,
yep,
because the real estate industry is driven by these huge players with big market shares. And so going back to this company that I told you about, Voxter, there was this company called Anow, and Anow had kind of like this operating system connecting appraisers with the lenders, because appraisers are still submitting the appraisal reports in PDF forms.
yeah,
Like, it's so inefficient. So then this appraiser, third generation appraiser, learned how to code, and he created this platform called Anow, where it was connecting all of these parties together, but he couldn't really get big clients because he was nobody in that industry. And that's when a company like Voxter came in and acquired them, and literally within weeks landed UWM, United Wholesale Mortgage, as the client. Because United Wholesale Mortgage, what they were doing is uh, they wanted to get competitive advantage and go appraisal direct. So instead of going through an appraisal management company, they wanted to go appraisal directly to their management, and they used that platform Anow, which was acquired, and it was only possible for that platform to get so big under an umbrella of a bigger company with particular connections
yeah.
to these Wells Fargo's of the world and JP Morgans. So you see that a lot. So it's very interesting that you said that.
Yeah. Yeah, and it's and like you said there, the company wouldn't have even seen the light of day if it hadn't been acquired by another small company that, where the funding was probably made very possible by investors like yourself in the micro cap market. And of course, again, when somebody hears $100 million, that's obviously a lot of money if you have it in your pocket. But when you're talking about $100 million in gross revenue company, it's not that, that's not that wildly big. I mean, it's not that crazy big. So hi, this is Casey Brown, host of the Cash Flow Pro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making Cash Flow Pro part of your day. Now, back to the show. Well, tell us a little bit about so when we start talking about real estate investing and investments and so on and so forth, how did you where are you at in that game right now?
With real estate,
Yeah.
I don't own any real estate other than my house,
Okay.
but I am interested. I am looking at possibly 12 to 24 months down the road to diversify into real estate, so I can have a consistent monthly income. It hasn't, and now it's a better time to do it, because when interest rates go up and you want to buy apartments, well, your cap rates are going to be higher, so the purchase price is going to be lower. But before the market started crashing, and before it became fashionable to talk about housing crash and recession, I went to Wichita Falls because I was interested in buying it was like a 25 unit mobile home park,
Mm-hmm.
and it looked great on paper. And so I jumped in the car. I drove straight 16 hours one way to look at it, because we needed to jump on it very fast. And unfortunately, by the time I got there, what we ended up doing is telling the seller, you know what, this place is so bad that we will only take it from you if you give it to us for free. And then it would probably still be too much. So that was my recent, you know, uh, attempt
I don't know
to
that I've ever
diversify my
really
holdings.
heard. I don't know that I've ever heard anybody put it like that. That this place is so bad that the only way we'll take it is we'll take it for free. But
No,
uh,
it was. I mean, when I walked in there, it was like a World War II. Half of the mobile homes had no windows, no doors. Uh, then when I went to the city and then the utilities, I learned that they don't have any water there. They cut off all the utilities, and they were delivering water to the tenants in jugs of water, and the seller, of course, conveniently forgot to tell us that there's no utilities.
oh man! So there you
Yeah,
drove 16 hours one way to
yeah,
find that
yeah,
out.
yeah, yeah.
Man, well,
And
I'll
and,
tell
and so
you.
then when we told the seller, we'll take it only if you give it to us for free, because we're gonna have to put in $500,000 into it just to bring it to back to the standards. And also we had I mean, half of those trailers would have to be like seriously remodeled. And so when we had a meeting with the city said, yeah, you can remodel them, but you have to use licensed contractors. Well, that alone was like, it's going to cost us $30,000 per trailer or per mobile home to do this, because you're putting this requirement on us. When we have our people, we could have it fixed, for 15,000,
Yeah,
not 30,000. And it doesn't make any sense to remodel a mobile home for 30,000 if you can buy a new one for 40 or 45. It
right.
doesn't make any sense.
Yep.
So the city killed it for us. And but the seller didn't want to give it to us for free, of course, because somebody else was going to pay something, and that somebody else probably didn't do the kind of due diligence that we did.
Wow. And they were delivering water. Wow, just out of curiosity, how much were they asking for the mobile home park?
They were asking for $200,000.
Well,
So as you can see, the price was looked very good on paper.
yeah.
You run some numbers, it looked very good. So you come in, you fix up the trailers and you evict the drug dealers and prostitutes, and then you can really turn it around. But after we looked at it, we can't pay 200,000 for the property, then put in 500,000 into it. You're
Yeah.
into it for 700. Well, 25-unit mobile home park, that you know
700.
you're not
You
going to
might as
sell
well
it for
have,
that much.
yeah, yeah.
Yeah,
700. You might as well have something that's real property that's not depreciating like a mobile home. I mean, like the mobile
yeah,
homes in a mobile home park. So,
right.
but the fact that they were toting water to them in jugs, that's a little bit extreme. I think even for the most aggressive investors that are willing to just about take on anything, I think that's even over the line, if you will. So, but I'd like to hear just a little bit more about this. So, where do you know where this automated or not automated, but do you know where this appraisal company that you're talking about, Voxter, do you know where that stands right now? How active are they? You said they were. Ha- where does that stand as of right this minute?
Well, first of all, they are already publicly traded,
Okay.
so people can buy stock in it. The ticker symbol is VXTR.
Okay.
And so they are in the process of increasing their revenues, signing up clients, and that the attorney opinion letter product is launching like within weeks. So they have three major products that they're launching: attorney opinion letter, and then RPTA, which is right now in real estate, when you have when you pay your property taxes, the assessor, you know, uh, gives you the price or assessment, and then they give you the bill, and nobody really questions it. Well, they're coming out with this product because they have all this data that they're going to tell their homeowners whether their property taxes are too high or too low, and by how much. And they're only also going to release this product to the lender, because the lender has a fiduciary responsibility to make sure that the taxes are correct. So imagine this product coming out in this market now. So they have these major products coming out right now, and it's not. And this is not a company that has like no revenues. They have about $200 million worth of revenues per year as we speak, and their market cap is about 500 million. So it's not expensive, but when they are coming out with these new products that into a market that's like so hungry, and also Fannie Mae and Freddie Mae, what they're interested is lowering the transaction costs for real estate
Yes.
transactions. In December, they came out with this study saying that the closing costs for low income people are higher than the no payment. Like
Wow.
it's absolutely ridiculous. So they are interested in lowering those costs. And the two biggest contributors for real estate transaction are the appraisal and title. So this company literally has a solution for both. uh, because they're lowering the appraisal costs. Their goal is to lower the appraisal cost from 800 to 200, and from 3 weeks to 2 days. Because when you have all this data, like you can get the appraisal done. So and then also the attorney opinion letter. So when you combine this, they will have a solution to the market. Instead of $3,000 for the appraisal and title, you can get both for $800.
I
So
have
now you tell me.
never
Yeah,
understood.
yeah. So you tell me, if you're the lender and you have a mortgage, and mortgage is a commodity. In other words, you don't care who you get the mortgage from, as long as the rate is the best.
That's right.
But all the players have the same access to capital, so that they can't really differentiate themselves too much on the interest rates. But what they can differentiate themselves are on closing costs
Yep.
and speed. So now you tell me, if you're the lender and you have an option to offer people $800 for title and appraisal,
In two
and instead of
days.
3 weeks, 3 days,
Yep.
don't you think I would have your attention?
Yep. Yep. And I'll tell you, I've said it for years that they're used to, and it hadn't been that long ago when somebody, like, if I went out and was looking to buy a rental house, okay, and I would get it bought, and then I would go home, or I would be talking to some friends, and I'd, hey man, yep, got that house bought, and guess what? I only paid what the tax value, what the tax card said it's worth. And if you paid what the tax card said it was worth, you got a good deal. And everybody knew that. And which was a double-edged sword, because then all of a sudden the government was like, okay, we're fighting tooth and nail to get our tax rates increased. Well, you know what? To hell with increasing the tax rates. We'll go the non-voting way, and we'll just start raising the assessment values. And now, with that being said, the assessment values have really gone up, but they also took a hike where they went up to what these things are really worth. And that's huge. And especially if you get the bank involved by saying, hey, this is the taxable value of this house, and then the bank starts setting precedent by calling the tax record value one way or the other. I mean, that's going to be big, man. I mean, that has.
Well, I mean, think about it also from your point of view. You probably own a house, right?
Yep.
Wouldn't you be interested in paying $25 per year to find out if your taxes are in line with your neighbors, or
Yeah,
if they're
I
too
think
high or too
everybody
low?
should. Yeah,
Yeah.
absolutely.
Yeah, so you have a huge market, 140 million homes, that is a possible buyer for this. And then if you're the bank that holds the mortgage, wouldn't you want to know if the taxes on that mortgage collateral are too high or too low? And it will cost you, if you're the bank, it will cost you $5 a year per uh, per house. Wouldn't you want to know?
Sure. Sure. Yeah. I mean, it makes sense, because then you can, I mean, yeah, for that little bit of money, I mean, my gosh. But, um, and and I have shook my head up for quite a while at the appraisal process in general, when it comes to just like, they're like, yep, we can get an appraisal. We bought my wife and I closed on one here not long ago, and I was like, it was 6 weeks on an appraisal. I mean, 6 weeks.
Yeah, because there's not enough of them. There's not enough of them. We're not creating them, and then the process is just so outdated. But also in July, you see, there's two types of appraisals. There is a regular appraisal, full blown appraisal, where you do some work in the office. You have to go inspect the property, measure the property, take photos, and drive the comparables and all that.
Yep.
So the whole process, it's mostly labor intensive and a little bit on the computer. Maybe 20% on the computer, 80% you have to drive.
Yep.
And then there is the desktop appraisal, where everything is done from the computer. So when it's a desktop appraisal, 100% of your work is done at the computer,
Yep.
right?
Yep.
And I think in July, that's when the desktop appraisals kick in, meaning that Fannie and Freddie will accept desktop appraisals instead of full-blown appraisals for most of the transactions, like purchase transactions and refinances. That is a complete game changer for a company like Voxter that has the technology that makes you faster. Because if you're an appraiser and 80% of your work is spent driving to the property, you don't really have that much incentive to improve your technology.
That's right.
But if you have to do and crank out desktop appraisals and 100% of your work is on a computer, and now you have the possibility of doing 10 appraisals per day, guess what? You better have this technology or you're going to fall behind.
That's right.
Right?
That's exactly right.
So again, it's this trend. I know where the trend is going because I've seen it. And you also have this other trend that was born out of 2008, 2009 financial crisis. When I was an appraiser, there was no AMCs. There was no appraisal management company.
Yep.
You had a mortgage broker or ordering the appraisal. And then, they blamed everything on, on mortgage brokers and appraisers. So then they created AMCs to be in the middle of it.
Yep.
So AMCs rode that trend from 2008, 2009 to now, and now they're gonna become obsolete because now United Wholesale Mortgage, it already showed them we're not going to use AMCs. We're going to go appraisal direct. So now, who has the platform to do appraisal direct?
Yeah, that's exactly
right.
Yeah.
So it's like this company is like in the middle of all these shifts happening within a real estate space, and very few people are paying attention. And even the people in the real estate space, I mean, real estate space has so many niches. You have the title, you have the appraisal, you have the brokerage. You don't have a lot of people that know a lot about every single thing. They know their particular thing. And so when you can kind of see the changes that are happening within and how they interrelate to each other, and then if you have a company that can provide a solution to this, I mean, that could be life-changing because, I mean, if you're involved in an entity that provides such a massive solution and you don't overpay for that entity and you're an owner, I mean, it can change your life because the returns can be astronomical.
Yep. That's exactly right. So, well, listen, we're running out of time here, and we've got a couple of questions that we ask every guest that comes on the show. And I'd like to ask, what is the best book that you have ever read or are currently reading?
Why are we so clueless about the stock market?
There you go.
It's a book that I wrote in 2009.
Awesome. That's your book.
That's my book.
Awesome.
I'm going to plug myself in, shamelessly.
There you go. No, that's great. I mean, anybody that can learn about, even if you're just reading it to learn about financial matters in general, I mean, check it out. There you go. One more time with the title.
Why are we so clueless about the stock market?
There you go. There you go, guys. Listeners, go run, grab it, get it, read it, tell us, leave a review. What is the dream vacation that you have either taken or hope to take?
I don't take vacations. I see so many people taking vacations because they want to escape their miserable lives. My life is not miserable. I don't need to take vacations. Every day is a vacation for me.
Okay. Awesome. Well, that's great. We'll run out there and grab that book and let's tell the listeners, how can they reach out and get in touch with you? I mean, obviously, do you want to send them to maybe a website to get your book or find your book or where they can buy your book? Or how?
No, I'm gonna make them work. I'm gonna make them work.
Okay.
I'm gonna have them take my impossible to pronounce name. They can take my name, put it into YouTube, and you'll find my YouTube channel. Awesome. Follow me, subscribe, and that's how our relationship can start. Awesome. But you got to do that. You got to do the work. You got to take my impossible name and then look for it.
All right. Well, the impossible name is in the show notes, as well as we will probably stick a link to the YouTube channel in there just so we can make our listeners, or so we can make it a little easier for people to connect to you. So, well, listen, I want to thank you for being on the show today. Thanks for taking the time. I know everybody's busy running around, and anything we can always learn about the stock market, or ways of alternative investing, which you touched on with the micro cap stocks and so on. So, thanks again for being on the show.
Thanks for having me.
Awesome.
Cashflow Pro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.